So are S&P 500 index funds a bad idea for your investment and retirement portfolios? What's up, you guys? Welcome back to the Average Joe on Money Financial Channel, and in this video I want to talk about a recent article that was posted on MarketWatch.com that really shed some light on S&P 500 index funds and raised the ultimate question: should you be investing your retirement portfolio, your investment portfolios with an S&P 500 index fund? Now, you know that I talk a lot about index funds, that I think that index funds are the perfect marriage between the average Joe investor and for retirement success one day. You know, for the longest time, mutual funds were the right path for the average Joe investor, but the costs were so expensive that it made it to where those costs would eat into the returns of those investments. And now that we have indexed mutual funds and exchange traded funds, it makes it not only a great fit, but also low cost for the average Joe investor. So am I talking about heresy right now, not investing in an S&P 500 index fund? And if so, why on earth would I say that? So the opinion article is out of MarketWatch. Eeek, why I don't trust S&P 500 index funds, least of all now. And I'll post a link to this article in the description below just so you guys can take a look at the actual text of it as well. But I can summarize it this way: diversification. That's what it is. And what we as average Joe Americans out there assume when we are buying an index fund is that we have diversification. And not only just a little bit of diversification, but a lot, meaning that we have our money over in this company, and hundreds of different companies, 500 to be exact, with an S&P 500 index fund. But the problem is that assumed diversification we have is not as good as we think it is. S&P 500 index funds are known as cap-weighted index funds, meaning that not every company of the 500 has an equal weighting in the fund. So if you were to invest $500 into an S&P 500 index fund, you would be wrong to assume that $1 would go into each one of the 500 companies. That would be known as an equal weighted index fund for the S&P 500. Instead, that $500 would be distributed across 500 companies, but not equally, and it would be based on the overall value of the company, based on their capitalization, or just the overall value of all of the shares that they have outstanding. And here lies the inherent problem with an S&P 500, or even really in a total market index fund as well. It's cap weighted, and as the article points out, as of right now, only 5 companies, make up 23% of the overall index. Just 5 companies. And they're companies you've heard about and that you probably use on a daily basis. And those 5 companies include Facebook, Amazon, Apple, Microsoft, and Google. Those 5 companies make up 23% of the overall index. So for every $100 you invest in an S&P 500 index fund, $23 is going to go into those 5 companies. And the article goes on to discuss the discrepancies with other sectors of the economy and how they account for such little weighting in the S&P 500 index, which leads to less diversification. For example, as it says here, airline stocks account for just 0.18% of the S&P 500. And I get it. I understand the alternative opinion, right? These stocks have done very well, these 5 stocks. But I think it would be wrong to assume that those 5 stocks will always do well and that other sectors of the economy might outperform in the future. That's what the name of the game is with diversification. You want to have your money spread across a lot of different companies so that when those companies outperform and others underperform, you have balance. But if right now, if Apple or Amazon were to tank, or they'd have a massive lawsuit and that would really impact their bottom line or affect their ability to do business in the future, that would really affect not only your portfolio, but the S&P 500 index as well. So what's the solution, guys? First off, I'm not advocating for not using the S&P 500 index or not using the total market. There is value in investing in a simple way, such as an S&P 500 index fund. I think the solution here is you've got to go broader with your diversification. You can't just have an S&P 500 or a total market index fund. You have to have that paired with other index funds as well. For example, in my own Roth IRA with M1 Finance, as you can see here on the screen, I don't just have the S&P 500. I've also got a little bit in tech, and I've got a little bit in other large companies, and I've got money over here in the mid cap, and I've got money over here in the small cap. I think the ultimate way to make sure you have a blend there is you've got to have money invested in medium cap and small cap index funds, or potentially try to find other sectors of the economy that you can pair it with as well. That does complicate it a little bit, but that would be my solution if you're concerned about diversification with the S&P 500 index fund. Of course, with M1 Finance or other brokerages as well, you can add individual companies. So if you wanted to add a sector of the economy, you can do that by adding individual companies. In fact, with M1 Finance, you can add your own portfolio or your pie by adding up to 100 different companies in there. So if you wanted to, you could invest in Microsoft, Apple, Google, Facebook, and what's the other one? Amazon. Microsoft, Apple, Amazon, Google, Facebook. And then you could add the other 95, but you could add them on almost an equal weighted basis, where maybe you only weighted those top 5 at like 2 or 3% each, and then the others got 1%, which would lead to more diversification. Point here is I'm just saying that everyone handles this a little bit differently. Some people are okay with the additional risk from the heavy weighting in tech companies, but if that's not you, if you want more diversification across your investments, then these are some opportunities for you to do that. That's all I've got for you guys today. Make sure to leave your 2 cents in the comments below. And if there are other topics you'd like for me to discuss that affect all people, but specifically the average Joe out there when it comes to finances, let me know in the comments below. And make sure to subscribe and hit that notification bell as well. Have a great rest of your day.